So Robert, what do we know about housing data in September as it relates to impacts of the hurricanes?
Well, Susan, we're working through the August data right now, and it looks like the tail end of August did get impacted by the storms. And as we get into September, I think we're going to see some weak housing data simply because of the big areas impacted, the whole Houston metro area, and virtually the entire state of Florida and up through the South Atlantic.
We are seeing some momentum in housing starts, though. What areas are we seeing that momentum?
Well, we saw multifamily bouncing back of all things, and that's been the weak half of housing. Single family market has been doing okay, and multifamily has been tailing off, but we did see starts on the multifamily side bounce back in August, which tells us we saw permits tail off, which tells us that starts ought to be coming back over the next couple of months.
Okay, we've seen unemployment numbers go up and down over the last few weeks. So what are those numbers looking like right now?
Well, that's another area where we're seeing the impact of the storms, and in particular Hurricane Harvey. After it hit, initial claims for unemployment insurance jumped up by 62,000, and they've been coming down the last couple of weeks. Now, it's really difficult to parse out the effects of Harvey versus Irma, and I expect them to stay a little bit elevated above the very, very low baseline we've had for the last couple of years, but it does look like they're healing up rather nicely right now.
Okay, well, the Fed meeting that wrapped up, we saw some news come out of that. It looks like there is potential for a rate increase in December. However, after that, when 2018 rolls around, you mentioned in your report that there's potential for a very different board of governors. Can you expand on that?
Yeah, that's right. We look at the longer term projections from the Fed in terms of their dot plot, where the current members of the Federal Open Market Committee talk about their expectations and actually plot them out for the Fed funds rate over the next year or so. So that can give us some guidance. And it does tell us that the Yellen Fed wants to keep raising rates. We're looking for one more in December. But as we get into 2018, I think all bets are off because Janet Yellen may not be there. And we may see as many as 4 new appointments to the Board of Governors. So that's really a whole new inner core of the Fed. And we're going to have to look for direction from that new group if indeed Janet Yellen is not there after February.
In the past, we've seen first-term presidents reappoint the same Fed chair, but in this case, there's a lot of speculation that that may not happen, right?
Well, certainly the Trump administration has proved to be unpredictable in some areas, and Janet Yellen is known to be more sympathetic to Democrats, and so we'll have to see. She could get reappointed, she may not. There is a long list of potential candidates who could potentially be her replacement, and we're not going to know, I think, until the Trump administration really tells us. And in terms of speculating, all we know is that Gary Cohn probably not be the next Fed chair because that's because of his disagreements with President Trump.
Okay, well, thank you, Robert. If you'd like to subscribe to Robert's reports, just go to comerica.com/economics.
Thank you, Susan.
Thanks, Robert.